We want to focus on the second quarter, where I think most of the disruption will be. It seems like it's taking forever to even get to the start of the second quarter, but we got to plan ahead here, and it offers some focus. I want to think in terms of a national pandemic adjustment period, mostly Q2. Real GDP will be reduced on purpose to meet health objectives. We just heard doctors talking about essential services and nothing else. So it's essential services plus whatever can be produced at home. You got to think that that's probably less than half the economy. We've been trying to do different calculations, and you can check out the blog on that. But it's an investment in public health. It's not a recession as conventionally defined, because this is an intentional move being made here. It's a planned partial shutdown of the U.S. economy, mostly during the second quarter. If you look at these numbers, the U.S. GDP for a quarter is, very round numbers, is about $5 trillion. So if you cut that in half, you're only talking about producing $2.5 trillion, and that means $2.5 trillion less of household income that we would otherwise have. So I think the $2 trillion package looks like it'll pass the Congress now, is about right. It's scaled about right for this situation. And this is relief, not stimulus. We're not trying to move production into the second quarter. The whole idea is to hunker down, lie low, let the virus go away. But I guess my point on talking about this is that the numbers will be unparalleled. But don't get discouraged, because this isn't at all comparable to past events in U.S. macroeconomic history. This is a special quarter. And once the virus goes away, then things will, if we play our cards right and keep everything intact, then everyone will go back to work and everything will be fine. So part of that is that we want to use the unemployment insurance program, and I want to call that pandemic relief instead. And we certainly want to encourage heavy usage during the second quarter, because the whole point is to keep people whole and keep businesses whole during this period, so that they can get tided over and get over to the third quarter. So, and as far as the timeline, no one really knows, but this virus might take other paths on us here. We don't really know, but I think for planning purposes, we want to think about the second quarter as the big hit quarter.
Does that mean you're anticipating, at least at this point, that you could see a very sharp snapback back to normal levels for the third quarter?
So what I think would happen is if we play our cards right and the virus proceeds, roughly speaking, as it does in China, then the third quarter would be a transition quarter. There'll be talk about reinfection, all kinds of things, but businesses will be coming back online. And then at that point in the fourth quarter and the first quarter of next year, then I think you'd see boom quarters where there's a lot of production at that point, because there would be sort of a pent-up demand, and a lot of things that didn't get done and got delayed would all start to get done at that point.